So there's a Yahoo Finance article that talks about Elon Musk saying that, hey, commercial properties are yet to see the big blow, the big issue with its prices, and definitely you're going to see a lot of pressure in the commercial real estate market, especially as this work from home narrative continues to linger on. And less people are coming to the offices, vacancy rates are at record highs. And then Elon Musk tweets about that home values are also next. Now, before I get into this, my name is Daniel. You're watching InfraVest. InfraVest is an organization that promotes financial literacy, teaches you about the macroeconomics, the news, the stocks, the bonds, the commodities, the currencies, crypto, and so on. If you like and enjoy this, feel free to subscribe. We've got courses as well. Check the description to read up more about the courses, the macro courses that we have, the investing courses that we have to learn more. Now, getting into this, Elon's talking about commercial real estate's going to be in trouble and says that home prices are also going to be in trouble. What is it that he sees? It's basically these vacancies, these issues of the people not coming back to the offices. And you're hearing, right? You're hearing some of these big firms like Blackstone selling certain commercial properties, another, company out there defaulting on their properties because they can't make the payments. A lot of them are also saying that, hey, any leases that are coming for renewal, because the environment has changed, you're going to see less of that. And on top of that, you've got this AI that's fueling into all of this tech rally that we're seeing in NASDAQ, NVIDIA, and so on, right? You're seeing all of this play into, and what does AI have to do with all of this? Well, if you don't need workers, and let's go back a little bit. First, if workers don't need to go to the office, and you've got an empty office, and on top of that, now the employers are saying, okay, we don't need workers anymore because we could just replace them with AI, then why do you need an office, right? So when people talk about commercial real estate, it's going to be a certain section, certain area, and that's mostly going to be the offices, right? There's certain commercial properties that might still do well, might weather this storm, right? For example, the medical offices. You're still going to need to go to the doctor. You still need to go to the hospital, right? If you're in trouble, you need some sort of surgery, right? You can't call and say, hey, I'm bleeding out of my left leg. What do I do? How do I stitch this up? Or maybe, we do. Who knows? Maybe there will be an AI that comes to your house, or you'll have an AI robot and you just activate it and say, hey, I'm bleeding. And the robot comes and just zips you up and there you go. You got stitches on your leg. You're okay. Or if there's, you got heart problems, it starts doing CPR on you or something like that, right? Be very crazy to actually see that come to fruition. But I'm not saying that it's going to happen right now this instant, but I'm saying that there's certain commercial properties that will probably do better than the offices. Sure, offices are going to see a plunge, which is going to affect the comparables on many of the commercial properties out there, but the medical offices, maybe the warehouses, the storage places, they may still weather the storm because people still need these things, right? You need a place to keep, you need a storage facility, especially if you're moving homes. People still need a home, right? And you need some stuffs to be kept somewhere. You probably still need those services. But definitely offices would be affected. Now, how does this affect the home prices? Well, when you think about it, and especially looking at the US, if a lot of these offices are having high vacancy rates, then what do you do with these offices? You can convert them into residential properties. Now, it depends on who's going to take that project and how fast they're going to take that project. Could it happen when this hard landing comes and the markets completely crash and everyone, these real estate companies out there, they turn in the keys to the banks and they say, hey, they can't make payments on these offices anymore. And the banks are like, okay, we'll take it and we'll sell it to someone else who's going to build, residential properties. definitely can happen then. And that would be also contributing to bringing those lower prices in the housing market. But what's another contributing factor from the offices, the issue with the office, commercial properties there to the housing? And I would say it would have to do with the labor market, right? So if the companies are feeling the pinch and the pain that, they've got this office here, they're spending a lot of money, demand is coming down, rates are going higher, and I need to get rid of this and I can't because I'm in some sort of contract or what have you, then I need to lay off some workers. I need to trim the fat and lay off these workers, which would then thus cause the unemployment rate to move up way, way higher, causes more people to be laid off. And if people need to go and get, some sort of payment for their next mortgage or what have you, and they can't because they don't have any savings, then you can see a lot of these properties come into the market and they flip to sell. On top of that, if a lot of these commercial properties and these owners are coming back to the banks and saying, hey, we can't pay this anymore, or we can't handle this. Now that's money lost for the bank as well. If that's money lost for the bank as well, the banking sector is going to feel the true credit crunch, which is happening right now, right? The tightening in the credit markets already from the central banks. You're going to see the banks even become more conservative so that when it comes time that either a builder or a real estate agency or a company or maybe a commercial property company out there needs more money or needs some sort of ease in its next payment to continue holding onto this office or this property or what have you, it's very unlikely that they're going to continue with that. And it's very unlikely that the bank is going to give them any credit to continue on with their operating expenses. Thus, they will either default, hand over the keys, or lay off a lot of workers, or both actually. And that's where you could see that trickle into the housing market, the residential market, as more people face the pain from all this tightening, the pain from the credit conditions, the pain of the melt up, the blow up that happens, and a lot of people losing the jobs. And like we heard from the Fed in August of last year, talking about, hey, there's going to be consequences, the unfortunate consequences of causing inflation or bringing inflation down is you're going to feel the pain. You're going to lose your job. The businesses are going to feel, the crunch, and it's going to be a disaster. So let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.